Hey, good afternoon, everyone. My name is Jeanmonod, Regional Sales Manager here at Angel Oak Mortgage Solutions. We'll get started here in about a minute. Hope everyone's having a great August, and we're going to dive into our bank statement loans. We're going to also dive into our bank statement HELOCs, and then we're going to show you some great tools that you can use to help you grow your business for the remainder of 2024 and then really drive hard into 2025. I'll introduce our subject matter experts here in about another 30 seconds, and that's it. We're just having a great month. Non-QM continues to just keep rolling. I know the MBA did a reforecast of their previous forecast from March, and they lowered their numbers again. And I can bet you any non-QM lender you're talking to is not lowering their forecast now or for the remainder of 2024 and probably even into 2025. So it's an exciting time, and we've got a lot of things working in our favor right now, and everyone should be really, really motivated for the rest of the year. So, all right, let's, a lot of people still logging in. All right, I'm going to introduce our subject matter experts. Ladies first, Kim Gilder. Kim, please introduce yourself, your territory, and what you love about this business.
Hi, again, Kim Gilder. I work in the Virginia East Coast area. What I love about this business is it really helps underserved borrowers who have not had an opportunity to purchase in the past. So it's helping all of these people either grow their portfolio or just to be a first-time home buyer when they've not had an opportunity, especially with the bank statement program helping self-employed borrowers.
Yeah, thanks, Kim. And then, I'm honored and a pleasure to work with Gerry Calderon and if you can't notice the jersey behind him right there is Evan Longoria from the Tampa Bay Rays. So, Gerry, please introduce yourself.
Thanks, John. My name is Gerry Calderon. I'm an account executive out of the Tampa Bay area. I've been with Angel Oak for over 8 years now. I've been in the industry for over 15 years now. Extremely excited to be here with all of you guys today. Hopefully by the end of this call, we can make all of you guys bank statement experts. I love everything about this industry. This is all that I know is the non-QM space. We are able to, like Kim said, serve underprivileged borrowers and give them solutions for the current loans that they cannot qualify for otherwise.
Yeah, thanks, Gerry. Thanks, Kim. Again, my name is Jeanmonod. I'll be moderating this today. You're in great hands with both Kim and Gerry here. Again, we're going to do a deep dive into our bank statements, and then we're going to talk about, obviously, the bank statement program, our bank statement HELOC program. We're going to talk about our quick quote tool, and then we're going to go into our marketing portal and show you guys how to market to these borrowers. So without further ado, we're going to open up with a quick poll question that is, how many of you on this call have originated and closed a bank statement loan in the last 12 months? And while we're asking for your feedback on this poll, I'm going to share some information with you. Since 2020, new business applications continue to grow at never seen before rates. So we've had 23 million since 2020. 23 million new businesses have new business applications since 2020 through June of this year. That's an average of 425,000 new business applications a month. So guys, this is the fastest growing segment of the industry. So wow, this is interesting. 73% have not originated a bank statement loan in the last 12 months. Well, that's why you're on this call, and that's why our subject matter experts are going to take you through this. So let's get started here. I lost my sheet. Here it is. Sorry, guys. Kim, let's talk about highlights of the programs, and let me know if I need to make this a little larger. Hold on, I need to move a few things around here. Sorry, Kim.
That's all right. While we're waiting for that, I want to start with where you should be looking for this business. A lot of you as loan officers, when you have a self-employed borrower and you're reviewing their tax returns and the income is just not working, there's a lot of opportunity under the bank statement program to help capture those borrowers. So instead of saying no and having them walk down the street and go to somebody else who is doing bank statement programs, this is your opportunity to capture that business for yourself. So with that being said, I'm going to go ahead and talk a little bit about the bank statement program. The bank statement program can be used for purchases, cash out, and rate and term refinances. So we do loan amounts between 150 and 3 million. We actually start as low as a 640 FICO score, and we go up to a 90 LTV. The 90 LTV does require a 720 score, but as you can see, we actually have a pretty wide bucket for your self-employed borrowers to qualify. We can use this for owner-occupied, second home, and investment properties, which is huge because you can capture all of it. We could do 12-month or 24-month business or personal statements. Basically, the biggest questions that we're asked as account executives, which statements should we be submitting for the pre-qualification? You want to get the statement that is showing where their business income is deposited, because 9 out of 10 times that's where most of their income is going to be calculated from. But again, your account executive in your territory will be able to walk you through that. So when we do the bank statement summary, we actually have a bank statement review team who underwrites the income for us. So it's not you trying to figure out what the income is. It's not me trying to figure it out. They'll actually do the calculations being underwritten up front. And then again, as account executives, we're going to assess an expense factor to that. We can go, the average is about 50%. We can go down as low as 15% for like 1099s and stuff like that. But there's a lot of different ways that we can capture that business. We're also good about seasoning. So we allow 2-year seasoning for foreclosure, short sale, bankruptcy. I'm going to skip over the 1099 because Gerry's going to talk about that. I'm also going to talk about the P&L a little bit more in a few minutes. We do allow permanent and non-permanent residents, and I think that's about it. Did I miss anything?
Yeah, no, Kim, you covered it great. We're going to talk about expense factors because that's always a question that comes up. And just little housekeeping rules here. Just this is being recorded. This is not a PowerPoint presentation. Everything we're doing today is from our website. So, and feel free to ask the questions. We've got a very, very seasoned person behind here answering some of the questions that come through the queue, but we'll also ask those questions out loud so we can make sure everyone in the audience today understands the question asked and the answer given. So, Gerry, talk about, you mentioned it earlier, Gerry, when you jumped on here, we're going to try to make everyone on this call, at least 73% of them who have not originated a bank statement loan, we're going to make them experts. So, Gerry, talk about what you like to see as an AE on the 1003, and then talk about what you really want to see on, and I feel like I'm yelling, I apologize, what you want to see on a credit report, Gerry.
So for the bank statement loans, we need a complete 1003 as you would do for any loan. The biggest difference that we're not going to have on the 1003 is we do not require you to put any income on the 1003. Like Kim mentioned earlier, we are going to send all of your bank statements 12 or 24 months to the bank statement review team, and they're going to give us the income calculation. So everything else on the 1003 you would do as you do any normal 1003. You put that business information is very important that it's accurate on the 1003. If it's a business bank statement loan, you want to make sure that the business matches with the bank statements. If it's Tito's Tire LLC, we want the bank statement to show Tito's Tire LLC, and on the 1003, we want the business name to show Tito's Tire LLC on there. You want to make sure you have the amount of years that they've been self-employed on there so that we know that it's been at least a minimum of 2 years that they've been self-employed, okay? And then you want to make sure that all of the rest of the business information is 100% accurate as the bank statement. Otherwise, as far as the 1003 goes, everything else is done the same as any traditional 1003. For the credit, go ahead. John,
go ahead.
For the credit report, we want to see, the biggest thing that we're looking for is obviously a qualifying score. Like Kim mentioned, we can go down to as low as 640 credit score. We do require trade lines for the program. It is required to have a minimum of 3 trade lines for 12 months or 2 trade lines for 24 months. Seasonings for short sale, foreclosure, bankruptcy, any of those are 24 months out. That's the things that we are mainly looking for in a pre-approval from an account executive. Otherwise, as long as they have the traditional trade lines that we require and the credit score is suffice with the LTV that they're looking for, then you're good to go.
Yeah, Jerry, one of the things you said about the 1003, which I think is really needs repeating, is, because everyone on this call, and Jerry and Kim and myself, we all want to get those loans off the street quickly, right? We want to get our income calculated quickly. And, Kim mentioned we have a team of experts. That's all they do is calculate the income for you. But Jerry, what you said about the job, the business name matching what's on the bank statements, and a lot of times I see that as not a deal killer, but a deal slower, right? It's one of those things that slows the deal down because it doesn't match, and therefore we have to go back and make sure 1003 is matching the business bank statement. So that's a great point, Jerry, and thank you for pointing out some of the other things as far as credit. Kim, let's go back. Let's talk about expense factors, because those are usually a lot of the questions we get regarding business bank statements and even personal bank statements.
Okay, so again, as a standard, we use a 50% expense factor. And if at a 50% expense factor, it works, we don't need to do anything else. Basically, it's a CPA stating that the percentage that they own of the business and how long they've been in business. Again, there's some exceptions to this. If you have somebody who's running a large corporation, they have 100 employees, the expense factor can be as high as 70. And then if you've got a guy who has an IT place and he's basically doing 1099 work, or a realtor, which is one of our best bank statement P&L 1099 candidates, we can go down to as low as a 15% expense factor on that with a CPA letter.
Yeah, and Kim, you mentioned exceptions. One of the great things about working with Angel Oak, and hopefully everyone on this call can feel your expertise and Jerry's expertise. Almost 25% of the loans we close here at Angel Oak don't meet our guidelines, which is really incredible from that standpoint of that's where you have an expert like Jerry and Kim who say, hey, I've done thousands of these loans. I know what we can get by and I know what we can't get by. And they're going to do that for you up front. So thank you for pointing that out, Kim. And expense factors, we also talk about our account executives being like the confessional booth, right? Let them know everything up front, because they're going to try to structure that deal to get it closed for you, your borrower, your referral source, the quickest and fastest way. Jerry, talk about, one spouse. The question here we have is one spouse is W-2 and the other spouse is self-employed. How do we get that deal done?
That's a great question, John. We can certainly do that. We can take the bank statement income in conjunction with the W-2 income. And the way that we would qualify that is we're going to take the 1003 with the bank statements and submit it to the bank statement review team. As we mentioned earlier, they were going to give us the income calculation for the bank statement income. Once we have that, we can add the co-borrower, or maybe in this case, it could be a borrower with the W-2 income. We'll just require the normal standard W-2 income requirements, which would be the pay stubs and the W-2s for the income. We see this quite often where one borrower is self-employed, another borrower is W-2, and we're able to utilize both of those incomes in order to qualify them in the bank statement loan.
Yeah, Jerry, and we'll even, just so everyone's aware, this is a big gig economy. You heard me quote some stats there from the U.S. Census Bureau about how many people are self-employed. But we have a lot of people who are W-2 don't want to quit that full-time gig, right? And then they're doing their side hustle, whether it be Uber or whatever it is. And as long as 30% of that income is derived from that self-employed job, we'll use the same one borrower. We'll use them for W-2 and self-employed. So, Kim, what about someone who owns 2 businesses? Will we allow 2 business bank statements?
Yes, we do. I actually just closed one. So, yeah, a borrower had actually owned two separate businesses. We can use two separate business bank statements to qualify a borrower. And again, I kind of started out, and I didn't want to gloss over this. Under the bank statement program, we're never going to see tax returns. So you're looking at tax returns, the income is not working. Let's say they haven't filed taxes yet for 2023. We don't care. Like, we absolutely do not care. Let's say they filed their 2023 taxes and they have a tax bill. Conventionally, you have to pay that amount. We don't care because we're never going to see the tax returns. So the not tax returns part is really important, especially even if we're doing a W-2 in self-employed, because we're only looking at W-2s. We will never look at tax returns.
Yeah, that's a great point, Kim. Thank you. Marquita is asking this. Yes, this is being recorded. This will be emailed out to everyone who registered, who attended by end of day tomorrow. So thank you. Just want to make sure we're aware of that. And everything we're doing here is from our website. Gerry, you know, we talk about calculating the income for the borrowers and the 1003. We talked about the credit report. What about, would you do a pre-qual for a TBD? To be determined. Yeah.
Absolutely. Yes, we can certainly do a pre-qual for a TBD. As a matter of fact, I do quite a few of them, especially with some of our in-house builder type, like KB Homes and some of the others that we do a lot of TBD determined pre-quals for them.
Yeah, and I want you to make sure everyone on this call is aware of this, and Kim mentioned it about getting that income calculated for you up front. That's the income that's going to be used through the entire underwriting process. So Kim, we have 12 months, we have 24 months. You know, what's the difference? And if you say 12, I'm going to cut you off of this webinar right now. So why would you use 12 or 24, please?
The 12 or 24 months, usually there's two reasons that we're doing this. One, it could be a pricing incentive. You might be able to get better pricing by doing 24 months versus 12. The other may be like a credit issue where we'll need to see 24 months versus 12. But if you do submit 24 months worth of bank statement and the 24 months is lower than the 12 and it works using 12, your account executive again is going to coach you on like the best way to get your loan pre-qualified. I mean, we're here to help you grow your business. So that's why you have experts, expert AEs to help you put this together. So if you've never done one of these before, don't be afraid, because you're going to be calling someone like me or someone like Gerry, who's going to walk you through the process from the first phone call or email all the way through the end.
Yeah, I think that's critical, Kim. And, you know, you and Gerry do a great job, and all of our account executives across the country do a great job doing that. And, you know, I'll give my little public service announcement here. If you know you are going to meet with a self-employed borrower, right? You know up front whether that lead came in or someone called you and they told you they're self-employed. Yeah, get their tax returns, try to go the conventional route, right? Blah, blah, blah. But get their bank statements while you're doing that, because, you know, what you don't want to do is you write up a pre-qual letter. They tell you they make $120,000 a year and they're out shopping for the house, and all of a sudden you realize you get their tax returns, they gross $120,000 a year, but guess what? They only, you know, write off more than half of that, so you're now down to $5,000 a month. Well, we get their bank statements, and now we're seeing that they have, you know, $250,000 going through there, and we're increasing their purchasing power exponentially. So, Gerry, one of the other things we talk about, you know, how many months reserves? This is Irene's asking the question. Thank you, Irene. What do we require for reserves, Gerry?
So we require 6 months on the subject property for the reserve requirements. Again, and that's only on the subject property that we're going to require that.
Yeah, and the other thing, you know, Kim mentioned we do second homes and investment properties, and I know, Kim, you do a lot of second homes in your area. And Gerry, we were all together in Florida a few weeks ago, and, you know, so Kim, talk about the LTV we'll go up to for investment properties and second homes on bank statements.
So on the second home and bank statements, all right, you caught me off guard here. Hang on a
Sorry.
second. Jared, do you want to answer?
This is live.
Yeah. All right, that's why I keep all of my matrices in front of me. So when somebody asks, I have it. So on investment properties for purchase, we can go up to an 85 LTV under the bank statement program for both second homes and investments.
Yeah, and Kim, I'm sorry about that, but and to Kim's defense, a lot of things keep changing, so it is always good. But Jerry, when we were in Florida last few weeks ago, I don't know who it was, Scott or Stacy, you were mentioning that if you go out and check your pricing on a second home or investment property, the LLPAs that the government's putting on those loans, you can do a bank statement loan and the pricing's going to be comparable to a conventional loan. And guess what? None of our loans have MI on them, right? So
that's a great point, John. And like you said earlier, not only that, maybe for a quarter difference, you may take your loan amount from a $400,000 loan amount to a $600,000 loan amount and increase your borrower's buying power. We all get paid on volume. We like a higher loan amount, that's for sure.
Yeah, Jerry wishes we got paid on units, but
not in my area, but
but it's going up, Jerry. It's going up. So Nathaniel's asking, he has two questions. Should we always start with 12 months first, then 24 if needed? And Kim, you kind of answered this question, so go ahead. I'll let you answer Nathaniel's first question.
Realistically, it's really going to depend on pricing. And Jerry's going to talk a little bit about quick quote, our quick quote in a few minutes, and how to get that pricing up front. If you're not seeing a difference in pricing, 12 months might be enough to do it. Again, if there's a credit issue or you think that 24 months is going to put them over the edge, you can get them up front. But I mean, there's no problem at all starting with 12 months up front if the pricing is comparable.
Yeah, and Kim, we said it a little bit earlier, Nathaniel. So just get all 24 up front, because then what we may see something that they don't qualify, and now you have to go back to the bar, and that slows down the process. And I know Jerry and Kim and their loan officers are all about speed right now. So so Jerry, I'm going to ask a question here from Mike. Can you do a construction loan on non-QM?
We can do a construction to perm. We cannot do an actual construction loan.
Yeah, good question though, Mike. Appreciate it. So, keep the questions coming in. We allocated an hour for here. I'm going to go back and have Jerry cover, our 1099, because a lot of companies who are W-2 and people, realize the expenses of doing that. So let's talk about our 1099 here, Jerry.
So we do the 1099 loan, which is a great alternative for your self-employed borrowers. On this program, we can go to as high as $3 million. We do go to a minimum loan amount of $150,000. It can be used as a purchase, cash out, or rate and term refinance. Just like the bank statement program, we can do it on owner-occupied, second homes, and investment properties. We do not require any tax returns on this program, so that's a huge perk. 2-year seasoning for foreclosure, short sale, bankruptcy, or deed in lieu. We'll either require most recent 1 or 2 years 1099 plus the year-to-date earnings statement. So we'll require the year-to-date earnings statement, bank statement to go in conjunction with the 1099. 1099 must be from one single employer and issued in the borrower's personal name. Just like the bank statement program, the borrower must be self-employed, working for the same line of work within the last 2 years. It does go down to as little as a 640 credit score, and we can do as high as 90% LTV on this program also. It's a great program, especially at the beginning of the year. It's a great program to utilize and to have under your portfolio.
Yeah, Jerry, and Kim mentioned it earlier, realtors actually make up, 9%, and we cover everything we call it under our bank statement program, but realtors make up 9% of the loans we close are actually realtors. So just remember that, and we'll talk about marketing to them. And just to give you guys some other stats, professional business services makes up about 17%. Construction and home improvement make up about 15%. So those are just some of the stats out there if you're thinking to market this. And Kim, Gerry mentioned in the last bullet here, borrowers must be self-employed, working for the same employer for 2 years. So on our bank statement program, Kim, we require that they be self-employed for 2 years up until a few months ago, right? We rolled out a 1-year self-employed borrower. Kind of give us a little bit background on that program or that revision to our bank statement program, or enhancement, I should say.
Yeah. So yes, we now do a 1-year self-employed. The key to this program is the borrower has to be in the same business. So if it's a dentist and he was working in a dental clinic for somebody else and now he's gone out and opened up his own clinic, that's something that we can do under this. And it's almost the same with the 1099, because realtors generally, they might work at Coldwell Banker 1 year and now they're working for somebody else, or they've opened up their own place. So this is our workaround to be able to do that 1-year self-employment. But the key is it has to be in the same line of work for a minimum of 2 years. It is capped at an ADL-TV. Again, we want to help people with this program.
Yeah, Kim, I mentioned how many new business applications are coming online every month. And, you mentioned a dentist, a doctor, even a roofer. Maybe a roofer, has been working for a roofing company for the last 5 years, but says, you know what, I can do this on my own. And they've been self-employed for the last 12 months. That's a great example, or those are great examples of thinking outside the box and how to work with those. Gerry, we have a question here from James. He's asking about the CPA verification for an expense ratio. Can it simply be a tax preparer even though they do not verify the license? So kind of put something around that for me, Gerry. So.
Yeah, no, it can be from a tax preparer. We are going to require that they have a tax ID number. But as long as they have that, we are able to utilize it from a tax preparer or a CPA. It does have to be on a company letterhead. We do have to verify that that person does exist from that perspective.
Yeah, thanks, Gerry. And Jay's asking, do we have to be a licensed mortgage broker to do bank statement loans? Can we refer to you and get paid? Jay just does mostly investment properties. Kim, you want to take that question, please?
So if you're talking about a business purpose loan for investments, we do allow you to be unlicensed in that state. But in general, you must be a licensed loan officer to do business with Angel Oak. We don't have any unlicensed options.
Yeah, thank you, Kim, for clarifying that. A couple other questions, and then we'll move on to the P&L, Kim. So get ready for that. What about something, Gerry? How do you verify? Give us some of the examples how you verify someone's self-employed, whether it's through SunBiz or anything else, Gerry.
Typically, it's through SunBiz. We can get the verification through the CPA. So a lot of times it'll be through the CPA letter that we're able to additionally verify that. If there's some sort of a license that they may have, that always helps also in being able to verify that they're self-employed.
Yeah, thanks, Gerry. And Kim, a lot of self-employed people are really cash flow conscious. So talk about, we do have an interest-only feature on our bank statement program. Just give a high level of how that works.
Yes, so we actually have a 40-year interest-only option. And this helps you when you have a borrower who maybe they haven't filed their tax return yet, and you think that maybe you might be able to fit them in the box next year. Having to go into that interest-only payment will keep their payment down during the interim of getting their business income up to qualify. So, yeah, it's a great option.
Yeah, and Gerry, talk about what if someone is not 100% owner of the business? How will you look at the income? This is a good question from James here.
That's a great question because we do see that often. So what we will do in that situation is we're going to lessen the percentage that they are. So just a simple example, let's say they have $1 million in deposits over the 12-month period, okay? Then let's say they're only 50% owner of the business. So we're going to take that $1 million and we're going to hit them for the 50% haircut, which is going to put them $500,000. And then we're going to take the percentage of ownership, which is now $250 because they're 50% owner, and we're going to divide that by 12, and that becomes now your monthly income. The minimum that you can be on business bank statements is 50% owner. That's the minimum that we will go down to.
Yeah, thanks, Jerry. And then, we still have an option for them if they have personal bank statements, right? If they're less than 50% and greater than 25%, we can go personal.
Personal, correct.
Yeah, so Kim, let's talk a little bit about the P&L program here. Let me move some things around here on my screen. So there we go.
John, while you do that, let me also add on the personal bank statement, we can actually utilize 100% of the deposit as long as they provide us with 2 months of the business statements. Okay, so what that basically tells us is that all of their expenses are being ran through the business. So therefore, we're not going to hit them for a business expense, and we will be able to utilize 100% of the deposits going into the personal account.
Yeah, Jerry, that's huge, and thank you for bringing that up. So again, everyone on this call, and Kim mentioned it earlier, don't be afraid to do these loans. You can tell by just working with Kim and Jerry and all of our other account executives across the country that they're going to lead you in the right direction. They're going to, I don't even want to use the word flip-flop, but they can flip and flop you between programs, whether it's personal business, P&L, 1099. They're going to find the right path to go down and take you down that path in a confident way. So, Kim, we don't do too much of this, Kim, but talk about the P&L, and then we'll jump into our HELOC, which is exciting too.
Okay, so again, we do offer a profit and loss option under our bank statement program. Again, the same loan amounts, purchase rate and term refinance, owner occupied second home investments. So the key to our P&L is it has to be prepared by a CPA or accountant. It does not need to be audited. And really all we're looking for is their gross income minus their expenses. We do require 2 months bank statements to support those gross receipts because we want to make sure that they're continuing to make this this income. And really where we see this the most, or I should say I see it the most, is I've gotten a 12-month bank statement program, and the borrower's using their overdraft protection to pay all of their bills whenever they want to pay it. So they have excessive NSFs or overdrafts. This is an option where we're not going to see that. So, I mean, I've actually closed a couple of them, so it works. It's just, it has to be CPA or accountant prepared.
So Kim, you mentioned this NSFs and stuff like that. Talk a little bit about our tolerance within that.
Well, that changes a lot. So, and again, 30% of the loans that we do have some kind of an exception. So when we're looking at NSFs and overdrafts, we if they have 10 on one day, that only counts as one. We really don't want to see more than 10 in a 12-month period, but if it's something that makes sense, I do exceptions on them, or I should say I request exceptions on them all the time. And let's talk about the exception process, because this is also really important. You do not want to wait until the loan gets into underwriting and then wait for an underwriter to make the decision. We're very, very fortunate here at Angel Oak that we have a non-agency underwriter that does this in the pre-qual stage. So regardless of whatever the exception is, we get it in writing up front. So when it gets submitted into underwriting, the underwriter already has the approval on the exception, and that is huge.
Yeah, and Barry, we're going to get to pricing out a bank statement loan. We're going to get to that tool that we have, which is really, really, really easy to use. And Gerry, talk about let's go talk about our HELOC, which has been an exciting addition to our program. So yeah, because we have people sitting out there, I'm just going to throw some more stats out here, Gerry, for a minute here. You know, we have 63% of the people out there have mortgages between 2.5% and 4%. 85% have rates less than 6%. So as one account executive on the West Coast says, these are generationally low rates. So, and there's so much equity out there in people's homes. There's over $1 trillion in equity in homes, and they don't want to move off those first rates. Gerry, give us some highlights of our bank statement HELOC. Again, bank statement HELOC for self-employed borrowers. So.
Certainly, John. And one thing, just to backtrack on the NSF and overdrafts, anything under 80%, we don't care about the amount. So just keep that in mind when looking at the NSFs and overdrafts. But we're super excited to be the first ones to have rolled out this bank statement HELOC program. We have gotten a ton of traction. We've only had it for a few months now, and we've gotten a ton of traction and are starting to now close quite a few loans in this arena. So this is something to add to your arsenal as far as your book of business within this program. The minimum credit score that we'll go down to is 700. The max LTV will go up to 85% that we will go to. The loan amounts can go up to as high as 500,000. We do offer first lien HELOCs on this program. Owner occupied, second homes, and investment properties are all acceptable on the HELOC program. We do have a full doc option also available on this program. We mainly see it for the bank statement program is what we mainly see the HELOC program being utilized for, but we do have also a full doc option available. The minimum draw that they can take is 80%. Interest only payments during the draw period. No restrictions on how funds can be used. So that's something to really keep in mind, that there's no restrictions on the fund or on how the funds are being utilized. We do have 15-year loan terms on it, 20-year loan terms on it, and 25-year loan terms on the program. This is really, really a program that's being utilized in today's market. As you guys know, HELOCs are being done all throughout nowadays. And to be able to offer a bank statement HELOC, we were the first ones to roll this bad boy out, and we're excited to have it and have it in their arsenal for sure.
Yeah, Gerry, and that loan amount, I think probably in the next 2 weeks is going to go up to 750. So just as a teaser there. So, but yeah, this is, you know, again, we talked about generationally low rates and so much equity in people's houses. They don't want to refi, do a cash out. This is a great way to create your own business. You know, I talked earlier about how the NBA is lower in forecasts just last month from March. And, you know, they're talking about business shrinking, and we're talking about growing it. And one of these tools that we have, we also have the closed-end second and the HELOC. You can use this to create your own business. Go back through your database for the last 4 or 5 years. And I think the average home since 2019, has appreciated 47 or 48%. And that's the average. I know in Florida, they've gone up higher than that. I know here in Texas they have. So, Gerry, one question here is, what's our max DTI on the HELOC? James is asking.
50% max on the DTI. And
it's based on prime plus the margin. And that margin, and Gerry and I had this conversation yesterday, that margin changes depend on the CLTV, dependent on the borrower's credit score. Yeah, Joe, no HELOCs right now in Texas on primaries. It's coming though. I think we're about 30 to 45 days away on that. So I'm here in Dallas. I am also anxiously waiting for that program to be rolled out. Kim, talk about one of the other slick enhancements we made to this program. Just talk about highlights of how we use the AVM in lieu of an appraisal.
Yes. So when you submit a HELOC program to us for pre-qualification, once that pre-qualification hits our system, it's automatically sent for an appraisal waiver. So we're doing an AVM upfront for you. And we generally have that back before the bank statement income is reviewed. So we know upfront at initial pre-qual whether or not an appraisal is going to be required or not, which is wonderful. I mean, it's great. You're not waiting for an underwriter to make that decision. It's done right up front.
Yeah, so another good question here from Joe is 125 He's asking about the minimum loan amount. 125 is the minimum draw. 125,000 loan amount, minimum draw 80%, which is $100,000. Just so you guys are all aware of that. I know we've talked a lot about, and we can still ask questions coming through the queue. We're going to keep this moving because we really have a bunch of great tools we still want to share with you. So Gerry, I'm going to have you cover the quick quote and how to submit for a pre-qual here.
Absolutely, John. So we try to make things as simple as possible for you here at Angel Oak. And if you haven't been in our quick quote, non-QM quick quote, I strongly encourage you to go on there. It's super user-friendly and it's extremely easy to utilize. It's so easy that even my 9-year-old can go on here and price out loans. So, and
she's 9 now. Okay. Last year she's an 8-year-old. She could do it. She
started using it as an 8-year-old. Now as a 9, she's a professional at it. But she's yet to have a denial on there. So I don't know how that happens, but we'll figure that out later. But first thing you want to do is you want to always click on the channel type. Okay, the channel type is going to always more likely be the broker. Okay, unless you're a non-dev. So, but broker channel is what you're going to click on. You're going to put the lien position. So if you're doing a first lien, then that's going to be the lien position, and then you're going to put your loan amount on there, and then you're going to go into your credit score. Once you put your credit score on there, you're going to put the loan of value that you're looking for. Now, this doesn't have to be exact. If you're just trying to get pricing, you can put 75 to start with, and then you could adjust at any point. You're going to put where the subject property is at in the area, in the state that it's in. Housing history, there's where you would put if they have any kind of mortgage rates on there. The property type will go up to as high as a 4-unit, and you'll see that on there, but you're going to click on the property type on there. We do offer non-warrantable condos, something we haven't really touched on.
Yeah, Gerry, let's stop here for a second. Talk about non-warrantables, because obviously in Florida, we get a lot of them. We get them all over. But I guess usually the question people ask, Gerry, does my LTV get affected by a condo being non-warrantable?
We go to 90% on non-warrantable condos. You do not have any kind of pricing. Depending on the LTV, you will have pricing adjustment to it, but your LTV does not get hit on the non-warrantable condo program. And we do see, like you said, more and more with Fannie and Freddie now changing all their guides on that. We do see a ton of these, especially in my area. But continuing on the quick quote, your income documentation, this is where you really want to pay attention, because this is where all of our loan programs are going to pop up. Okay, for the 24-month business bank statement program, you would see that there. You'll also see personal bank statements if it's a 1099 program or whatever it is. This is where you're going to utilize the income documentation. Occupancy type, like we said earlier, you can do investment, second home, or owner occupied. Borrower type, you want to make sure that you utilize this, whether they're a U.S. citizen, permanent res, or non-perm, which we can do any of those on our bank statement program. And then if they would choose to waive escrows, this would let you know if they're able to or not. And then the interest-only option also will let you know if it's available or not. The moment you click on all these, you're going to go into your borrower or lender pay compensation. You should get the rates in program below. Okay. So if you're going to go to a borrower comp, and we can, you can get with your account executive as to the different ways that we can compensate you, whether it's borrower paid or lender paid, and how that works. But you will be able to get the rates and programs right here just below. It'll actually tell you, which is really cool, the LTV that you requested and the max LTV that you could go to. So in this scenario, we requested a 75% LTV, but it's letting me know that I can go to as high as 90%. You see the rate there, 6.6. That's correct. Bank statement loan, 6.6 interest rate on there, which is pretty darn good. And then it shows you also the bankruptcy seasoning, housing seasoning, the reserve requirements, which in all of our loan programs is just on the subject property. And then you can have, you'll be able to see also there the duration of the lock period that shows up on there. Just below that, it will give you some of the general requirements for the program. So it will go into some of the details of the program as far as what the minimum loan amount is, as far as what the standard trade line requirements are, and some of the minor details in regards to the program. Okay, now once you get here, you're going to want to click on the blue button that's there that says View Rates. Okay, this will allow you to select the pricing that you would like. Okay, it'll tell you what the best pricing is, or what's going to cost the borrower, or what
your pricing is accordingly to what you selected. In this scenario, John's going to click on the 6.625 rate, and then we're going to scroll all the way down, and we're going to select our options.
Yeah, Gerry, and just clarify, we're not locking the loan at this point, right? So.
No. This is none of, at this point here, you can play around with any of those figures, any of that, you know, whether it be LTV, whether it be the program, whether it be any of that, and it'll tell you if they're not qualifying or if it's not available for whatever reason, it'll actually show on there. Okay. Once you submit your actual rate or select your rate, it's going to take you to step 2. Here, you can either upload your Jeanmonod 3.4 file, or you can go ahead and just click on next, which most of our brokers, this is what they do. Once you click on next, it's going to ask you to fill out the general information. You're going to see the program information and then the general information. You're going to first select account executive. You can't find one, feel free to choose me on there. And then you're going to put the company information on there. That's obviously your company information, your information on there. And then the very last item is going to ask you for the borrower's information. Here is where you would just upload a 1003, a credit report. Okay, if it's a bank statement loan, then you're going to upload the 12-month bank statement or 24-month bank statement, and you're going to drop them all in here. Okay, if you have any additional documents that you want to provide, you know, sometimes people will say, oh, well, I know they're going to require rental history. Well, let me go ahead and upload the 12 months canceled rent checks on there, or any other additional documents you can also upload for your account executive to view on here. And then just below that, you're going to see all of the additional comments that you can select on. I do encourage you to utilize that additional comment section because your account executive is always, you know I always look at the additional comments to make sure they're not letting me know, hey, this guy's a non-perm, or hey, he's you know, looking for 85, didn't know if possibly we could get an exception for 90. So something of that sort you want to add here in the additional comments. And once you've completed all that, you're going to click on submit. That'll go directly to your account executive. Now, one thing that we have here at Angel Oak is we have very seasoned and experienced account executives who have been doing this for a long time. I mean, we're dinosaurs of the industry here at Angel Oak. So once you submit this, your account executive is going to get this pre-approval, okay? They will get back to you turnaround time, usually within 24 hours, if not same day, depending on if it's a bank statement loan. We do have a 24-hour period for the bank statement team to review. If it's sent in a lot of times in the morning, we can get the bank statement review team to give us an answer by mid-afternoon and possibly get that pre-qual to you same day. But it is usually a 24-hour turn time in which the account executive will get the pre-approval and get it back over to you. Our pre-approvals here at Angel Oak are extremely solid. I mean, once we issue a pre-approval, you know, you can take it to the bank that we have done our diligence to make sure the credit's good, the income is good, and everything else as far as the loan specifics qualify for the loan program. We have that income that the bank statement review team utilizes for us, and that income is taken to the bank. That's the income that we're going to underwrite the loan with, and we're going to utilize that income on there.
Yeah, Gerry, you mentioned one thing, you know, you could change it to an 85%, a 90%, you know, Kim, do we allow gift funds on our bank statement program? So maybe trigger a question, Gerry, so thank you.
Yes, we do allow gift funds on our bank statement program. The only thing that we require is the borrower has 5% and their 6 months reserves of their own funds. Anything above that can be gift funds. And it's your standard gift relative where the funds are coming from. We prefer that the funds get sent to the title company. It makes it a lot faster and quicker to close. We'll coach you on that if we know that there's gift funds up front, instead of waiting for them to go through the borrower's bank statements. But yeah, we allow gift funds on the bank statement program, P&L and 1099s.
So then this obviously this started another question from Barry here, Gerry. What are your maximum seller contributions? Good question.
That is a great question. Believe it or not, we go to as high as 6% on all of our loan programs.
Yeah. Mm-hmm. Yeah. So you know, what's that?
We save a lot of deals that way.
Yeah.
And
I
point
agree.
out investment properties, because investments at a 6% seller concession is huge. That's really important.
Yeah, so thank you for Barry for that great question. So we're going to talk about, we're going to let Kim take, oh, sorry. We're going to talk about, you know, like Gerry just went through the quick quote, you know, you don't need login credentials for there, but, you know, Kim's going to take us through the broker marketing portal. Sorry, got interrupted here by a call that just is. So Kim, you need login credentials here, right? And you know, this will pop up, and I'm going to bypass this because I already have broker flyers up already, Kim, because I wanted to make sure we could get a download of it, and it's still downloaded. And I'm running off a test site here, so I apologize to everyone for this. So let me do something else here. I'm going to move a few things around here, Kim. I've got to get to my.
While he's doing that, I want to talk a little bit about the marketing portal. This is for you. When you go in and put in and pull up our library of flyers, you're not going to see Angel Oak anywhere. You're going to be able to put in your photo, your company information. And this is really great because, you know, a lot of loan officers go out and visit their realtors and they're talking about service and rates. This is giving you a different thing to talk about, you know, when you're going in and visiting your realtors, because again, we talked about your realtor partners being your best customers, especially on the bank statement and 1099 program. You're going to be able to go in and pull off flyers with just your information on it and talk about and have a different dialogue and talk about different things. And that's really great. You can, under our marketing portal, we actually have the ability to do presentations. Like if you wanted to go in and do a realtor presentation, we have it. Online social media, we have it. So again, this isn't about Angel Oak. This is all about you.
Yeah, Kim, you know, so, you know, the flyers, you know, it takes a while for them to download, but you can customize them any way you like, put your picture in. As Kim mentioned a couple times there, it's nothing about Angel Oak. It's all about you, you know, the broker. And this is just an example of one of the flyers we have there. And if you, like, if I just type in my name here, it's going to populate and it's pretty quick. And if you do it on one flyer, it populates all these great flyers we have out here. You know, we have an AE who says, you know, Angel Oak has invested a lot in your success. And these flyers are just one example of it. The other one we have are these social media posts, right? And they're catered towards borrowers or realtors. And we've got them out there for LinkedIn, Instagram, Pinterest, Facebook, LinkedIn. They're all out there. The content's been created. You know, Kim started this call saying how we serve underserved borrowers. Well, I'm going to get a little sarcastic here. This portal, this marketing portal, I believe is one of the most underutilized portals in lending business, period. And I think it's the most strongest portal for marketing in the lending industry, period. So I challenge everyone on this call, 73% of you have not originated a bank statement loan in the last 12 months. We've created this all for you. So again, you see how all my information is there right now on that. So and then Kim, you touched on you touched on the broker the realtor presentation. Sorry, but this is, I know Gerry does a lot. Kim, I know you do a lot. I do a lot. All of our AEs do a lot. Gerry, discuss some of how powerful these presentations are, if you don't mind.
Oh, they're powerful, John. I mean, they're guaranteed to get you a loan. You know, every time I've done one, there hasn't been an actual loan that hasn't came out of it. And just keep in mind when we're doing these realtor presentations, we're doing them on your behalf. There's nothing that's driven as far as Angel Oak when we're doing these. We're doing them based on your behalf. We're just a loan partner of yours that's familiar with these programs and able to present in regards to them. But if you're not utilizing those, definitely get with your local account executive and do so, because a lot of the borrowers that we serve here at Angel Oak are realtors. And believe it or not,
these are the programs that they're looking for, and these are the programs that they can really utilize.
Yeah, and we talk about, increasing a buyer's purchasing power using bank statements versus tax returns, Jerry. And I'm going to use just Barry. Barry's asked a lot of great questions here. We've got a lot of great questions from all of you, but Barry's name was the last one in the queue, so thank you, Barry. So if I'm going in there and presenting on Barry's behalf, I am literally going in there, and I use this, people shake their head because I use it all the time. We go in there like we're in the witness protection program. We don't say anything about Angel Oak. I'm going to go in there, and my presentation is all about Barry. And we are just one of Barry's investors. And what are you going to do when you hear about a self-employed borrower? You're going to call Barry. And what are you going to hear when you talk about an investor who wants to buy an investment property using the debt service coverage ratio program? You're going to call Barry. Everything's directed right back towards Barry. So nothing about John, nothing about Angel Oak, nothing about Jerry, nothing about Kim, all about Barry. So it's a powerful presentation. As I mentioned, 9% of the loans we close are for realtors. You get 13 realtors in a room, 9% of that, you're going to get one of their loans, as Jerry said. He'll guarantee it. So, Kim, anything else regarding marketing?
I thought I covered everything with the flyers. I did use social media. I can give you like a little tip on how I use it, because I use these flyers all the time because, I have a loan officer call me for a bank statement program. I'm attaching one with my information to the loan officer. If you have this on your desktop or saved in a file, and you have a realtor talking to you about a 1099 program, and you've got that flyer, it's actually something tangible that they can see, print out, have on their desk. You can walk in with it. It's really like visual. It's not just you saying something and then they forget about it. And it's really nice when your realtor sends you an email, says, hey, I've got a self-employed borrower, and they're talking about the income problems that they're having with another lender. It really helps you kind of stand out, because it is, like, as John said, it's all about you.
Yeah, and we have a same AE I mentioned earlier out in the West Coast. He gives presentations and kind of jokingly says it, but it's true. How do you find self-employed borrowers, right? Mm-hmm. Well, you open your front door, you will trip over them, whether they're a landscaper or anyone else out there. CPAs, right? We have a flyer out here specifically addressing CPAs because they do such a great job writing off everything on self-employed borrowers' taxes. We have a flyer you can send to a CPA. So, there's so many different ways. Any strip mall you're going in, every one of those are probably owned by a sole proprietor or a partnership. Bring a flyer into them. 73% of you have not closed a bank statement loan in the last 12 months. How many people out there who are self-employed don't even know that this loan exists and don't know that they can qualify for a home using their bank statement? So, Kim, anything in closing? I know we're at the top of the hour.
Don't be afraid. I know I said that from the beginning. You can't be afraid to think outside the box, because if you're not thinking outside the box and somebody else is, they're getting this business. If they're coming to you first, step outside your comfort zone, get the 1003, get the credit report, get the 1099s, P&L, or bank statements, and get them off the street and let us help you close those loans.
Well said, Kim. Jerry?
No, that was well said, Camelman. If you're not utilizing these programs, then your next door neighbor is. And these programs are not that difficult to do. Most of the loans that we do, we end up having the brokers, especially after the first loan, come back and say, wow, that was really simple. Thank you so much.
Yeah.
Like Kim said, come out of your comfort zone, give it a shot. There's very, very exceptional account executives here at Angel Oak that can help you and guide you throughout the system. And the bottom line is that we're here to help you to make more money.
Yeah. Thank you, Jerry. Thank you, Kim. I really appreciate you guys taking time out of your day. As always, professionals. So just want to remind everyone, this is being recorded. This will be sent out to you before end of day tomorrow. For everyone who joined us here today, thank you very much. For those of you who have closed loans with Angel Oak, we really appreciate your business. And for those who haven't, obviously you can feel the expertise that Kim and Jerry and all our account executives across the country bring to you. So feel confident and comfortable that we will close your loan. So on behalf of everyone here at Angel Oak, thank you for your time today, and we look forward to doing business with you in the future. Thanks. Gerry, Kim, thanks a lot.
Thank you.
Thank you, everyone.